Welcome, dear friends. As you know, our Finance Minister Nirmala Sitharaman ji has given us a budget, very charming budget, very attractive budget, and every news channel and every business forums or institutions they have appreciated this move, and especially the middle class was quite happy because of income tax rates was changed, the slabs has been changed. So in light of that, I was thinking to prepare few videos on that issues, budget, pre and post budget, but I could not make today's article, which made me to compelled me to make this video, that is related with the RBI, because I have also taken the home loan. So it is quite natural to have interest on such articles where I am also involved, I am also linked, I am also affected. So RBI rate cut, what it means for retail borrowers and banks. So यहाँ पर मैं बताऊँ, बेसिक नॉलेज ये है कि जो borrowers हैं, customers has a link with the banks and banks has a link with the RBI. So RBI issues loan to the banks, and the rate at which the RBI issues loans to the banks is known as bank rate or repo rate, depending upon the short and long term cases. RBI earns a rate of interest, and when bank deposit their surplus, it is known as reverse repo rate, and then banks earns their rate of interest. So in this light, Sanjay Malhotra, शक्तिकांत दास के बाद आप गवर्नर बने हैं, तो इनका एक ये इंटरव्यू दिखाई दे रहा है, इनसे कुछ क्वेश्चंस पुट किए गए हैं, एंड ही इज गिविंग हिज रिस्पॉन्स. The Reserve Bank of India RBI Monetary Policy Committee on Friday delivered much anticipated rate cut of 25 basis points, taking the policy repo rate to 6.25%. तो रेपो रेट को कट किया गया है. अब जब रेपो रेट कट होगा तो इसका बैंक पर भी असर पड़ेगा. बैंक की लोनिंग कैपेसिटी बढ़ जाएगी. दिस इज द फर्स्ट रेट कट इन द 5 years एंड कम्स amid slowing credit growth and easing inflation. The decision of the Monetary Policy Committee (MPC) expected to lead to the lower equated monthly installment EMI for retail borrowers by an equivalent amount, provided their borrowing rates are linked to an external benchmark, especially the repo. The repo rate is the interest rate at which commercial banks borrow from the RBI. Given that a majority of floating rate loans are linked to external benchmarks, the impact of the repo rate cut is expected to be far-reaching. Min takes a look at what this means for thousands of retail borrowers. How will the central bank's rate cut lead to the changes in इंटरेस्ट रेट्स फॉर बोरोवर्स? ठीक है, तो बोरोवर्स के ऊपर क्या इसका प्रभाव पड़ेगा? जो आरबीआई ने रेट कट किया है 6.25% का, जो रेपो रेट कर दिया गया है रेट कट के बाद. एट प्रेजेंट रिटेल एंड स्मॉल बिजनेस लोन्स आर लिंक्ड टू एक्सटर्नल बेंचमार्क्स एंड कॉर्पोरेट लोन्स आर स्टिल ऑन द मार्जिनल कॉस्ट ऑफ फंड बेस्ड लेंडिंग रेट और MCLR. EBLR refers to external benchmark based lending rate, which, as the name suggests, is linked to benchmarks like the central bank's repo rate and is used to price loans. As of September 2024, over 59% of all floating rate loans were linked to an external benchmark, while 37% were linked to MCLR. The change in the repo rate, therefore, will translate into an equivalent change in the external benchmark rates of banks. What will happen to monthly repayments for retail borrowers, meant to induce seamless transmission of rate change by the central bank to the bank lending rates? External benchmark have in the past allowed retail borrowers to benefit when RBI was on a rate cutting spree after the COVID-19 pandemic. This is going to be repeated this time around as well. Retail borrowers who have taken floating rate loans will see their EMI shrink as banks pass on the benefits of a lower repo rate and to end consumers. Borrowers would also have the options to keep their EMIs constant while reducing their tenure over which they need to repay the loans. How does this help in credit growth? A repo rate cut is also expected to lead to a higher credit growth as per latest data from the Reserve Bank of India. Non-food credit growth stood at 11.4% in January. Non-food credit is bank credit after adjusting for loans given to the Food Corporation of India (FCI). A cautionary stance and clamp down on unsecured loans has meant that banks have also gone slow on lending without collateral. In fact, the aggregate growth of retail loans, home loans, credit card outstanding, education loan, and vehicle, among others, slowed down to 12% year to year to in December 2024 as compared to 28.4% in the same period last year. As per RBI data, other personal loans, consumption loans saw a growth of 9.2% in December 2024 as against 23.2% in December 2023. How long will it take for banks to pass on the rate cut to borrowers? Under the RBI norms, lenders need to rest their external benchmark based lending rate at least once in 3 months. This would mean that the borrowers will be able to get benefit of lower interest rate once the lender resets the benchmark rate. Will the RBI decides to cut rates impact lenders? Experts believe believe that the rate cut may hit banks' net interest margin, which is a key indicator of profitability. Estimates estimates by rating agencies ICRA showed that on aggregate level bank margins will contract by 15 basis points. Sachin Sachdeva, Vice President, Sector Head, Financial Sector Ratings, ICRA said the impact on private lender is expected to be higher at 20 basis points by net interest margin. For public sector banks, the margin are expected to contract 11 basis points. ये था हमारे आरबीआई के नए गवर्नर संजय मल्होत्रा जी का एक ब्रीफ इंटरव्यू, उस जिसमें उन्होंने रेट कट से होने वाले इम्पैक्ट बैंकों पर और बोरोवर्स के ऊपर जो इम्पैक्ट पड़ेगा उसकी चर्चा कर रहे थे। थैंक यू।